All right, welcome back. So, as we're wrapping up 2025 and looking ahead, the market is in a really interesting spot. It feels like it's at a crossroads. On one hand, you've got this incredible buy the dip optimism that just won't quit. But on the other, there's this deep anxiety that's got everyone looking over their shoulder. So, what's really driving this tug of war?
This quote just nails the feeling right now. It's a total battle between two massive forces. All these scary stories that are fueling fear, and this gut feeling that inside all that fear, that's where the real opportunity is. And that conflict, right there, is what's going to define 2026. So, yeah, even with this core belief that every dip is a chance to buy, you can't ignore this huge wall of skepticism investors are trying to climb. And we're not talking about a small worry here. This is a really widespread caution that's putting the brakes on the bulls. And just how widespread is it? Well, get this. A whopping 68% of investors are either bearish or neutral right now. That's more than 2/3 of the market just kind of sitting on the sidelines, totally unconvinced that we're about to blast off. So what's got them so hesitant? Well, it really boils down to a few major worries that are creating all this uncertainty. First, you've got the massive AI boom. I mean, is this a real revolution or just a bubble that's about to pop? And then, of course, the question that's always on everyone's mind, what in the world is the Federal Reserve going to do next? Okay, let's dive into that first one, because it's the biggest force of them all, artificial intelligence. There is no doubt it's the engine driving the market, but it's also the source of the biggest fears. It really is a classic double-edged sword. On the one hand, the bull case is just wow. We saw third quarter earnings growth pop at 15%, which is more than double what anyone expected. And that was mostly thanks to AI. But the bear case is just as strong. You've got totally legitimate fears of a bubble. You've got intense pressure for these companies to prove they can actually make money from this stuff. And now you've got fierce new competition, like Google's Gemini coming right for OpenAI. And this really gets to the core of it. We are officially past the hype phase. The market isn't just throwing money at cool ideas anymore. It's demanding results. The whole conversation has shifted from what if to the cold hard math of, okay, what is the actual return on this massive investment? So the whole thing boils down to this single question. Is AI a true game-changing revolution that's going to create decades of growth? Or is it a speculative frenzy that's about to run headfirst into a wall? Seriously, the answer to that question could define the entire market. Now, that AI question is huge all by itself. But it gets even more complicated when you add in our second big uncertainty, the ridiculously tough spot the Federal Reserve is in. The Fed always says they're data dependent. Well, that dependency is about to get seriously put to the test. This timeline lays out the problem perfectly. That recent government shutdown pushed back a bunch of key data releases. And the big one, the December jobs report, maybe the most important number the Fed looks at, is now going to come out after their December policy meeting. And yet, even with the Fed basically in the dark, the market has already made up its mind. Investors have gone all in, pricing in the idea that the Fed is going to have to step in and cut interest rates. Basically, they're betting on a rescue. So this sets up this incredibly high-stakes game of chicken. The Fed is flying blind. They have to make a huge decision without the very data they need to back it up, all while the market is screaming for them to cut rates. So what do? Do they give the market what it wants, or do they stand firm and risk a massive tantrum? So yeah, the Fed is in a tough spot. And just when you think the domestic picture couldn't get more complicated, all this uncertainty is getting turned up to 11 on the global stage. We've got these huge negotiations going on that could totally reshape global trade as we know it. Let's just look at the central fight in the talks between the US and the EU. It kind of breaks down like this. The US is pushing Europe to ease up on its digital rules, which mostly hit America's big tech companies. And in return, the EU is saying, okay, but you've got to give us a break on those high tariffs on our steel and aluminum. And this quote from the Commerce Secretary really tells you everything you need to know about the US position. The message is pretty blunt. Do things our way, embrace our tech-led model, and you'll get a better deal. It's a really bold play in a super delicate negotiation. And on top of the trade talks, you've got other geopolitical events just adding more layers of complexity. Take the Russia-Ukraine peace talks, for example. They have a direct and immediate impact on energy markets. Any hint of progress over there can send oil prices swinging, which creates yet another massive variable for the global economy. So when you pull all these different threads together, the outlook for 2026 starts to look less like a simple forecast and a lot more like a series of critical, connected questions that every single investor is going to have to wrestle with.
And here they are, the questions that are going to define the year. Is AI actually going to deliver real returns? Can the Fed somehow stick the landing without being able to see the runway? How are these huge global talks on trade and peace going to end up? And finally, with all this uncertainty, how do you find the opportunities hiding inside all that skepticism? At the end of the day, 2026 is shaping up to be a year of competing stories. The bull story versus the bear story. Revolution versus bubble. Fear versus opportunity. The critical challenge for all of us is going to be deciding which one of those stories to believe. Thanks so much for joining me.